Thank you so much, Keenan, and welcome everyone. We're excited to be the capstone to this exciting day for the organization. And thank you to Anu and Susan for both joining us today. Without further ado, let's just jump right in to where we are. So I think we're at the start of Q2, coming off of a really challenging and difficult year for women. You couldn't have avoided the headlines to see the negative impact that COVID and the pandemic had on us. But I thought it would be helpful to really look at unpacking the numbers and what that meant for female founders in 2020. And the news was not good. We all know this. So we had record lows. 2.2% of funding went to female founders who are exclusively female-founded organizations. Slightly higher, significantly higher, 12.2% of that went to mixed gender teams. But when we also look at the number of deals that were done for female founders, only 6.5% of the deals and 17.8% for mixed gender teams. So the numbers weren't good. We went down, we backslid in some cases as far back as to 2017, which is when Allraise as an organization started tracking these particular numbers. So, and yet in the backdrop, it was remarkably a record-setting year for capital deployment in venture. And so there's this horrible dichotomy that is existing between the numbers flowing, the amount of dollars flowing, and what's flowing to one woman. And I know you both care deeply about this. So I thought we should start by unpacking the numbers and what the industry should do to address these numbers. So Susan, I'm going to start with you on this question.
Unmute, I think.
You need to unmute, Susan.
Okay, better. I'm going to start just by talking about that 12.2, which in some years has been 15% for mixed founding teams. But I think what's worth recognizing is that means that 88% of all venture capital funding went to all male teams, which is pretty stunning today. I think there are probably hidden signals that are more positive. One thing I will tell you is that we saw female founders not miss a beat during COVID. So there was not a week when our deal flow went down during that period of time. So there's no question that nobody stepped back and said, you know what, I'm going to take the year off, or this isn't a good time to, whatever it might be. So the fact that a significantly lower total number was raised, it was still $5 billion that went to female founders. And I think we should actually focus on that number more and see whether we can continue to grow it. But we can spend a lot of time concerned about the overall numbers and why women don't get more. And what I have found is that that's greeted by, essentially it's like dead air for people. So the best thing I think that founders can do is to recognize that there is a lot of capital out there. We'll get into specific ways they can access it, but I think spending too much time on the negatives is actually not going to do anybody a lot of good. We have to do that, right? But I don't think female founders should be doing that.
Anu, any comments on?
Yeah, definitely. So, kind of going to Susan's point, so started the fund in 2014, fundraising a couple years before that. And as part of the kind of thesis around Female Founders Fund, what we wanted to do is really build an ecosystem and shed awareness on some of these issues at a point when, even the term female founders didn't really exist for most people. And, the headline numbers, I think over the years are definitely noteworthy. But we actually have taken a slightly different approach to looking at the numbers. And that started in 2013 when we did our first State of Female Founders report. And what we decided was, sure, you have billions that male founders are raising, but let's actually start at the bottom and look at that first institutional round. If you don't have movement there, then the chances of you raising 100, 200, a billion, just not going to happen. And so, so just to kind of share a little bit around that, in 2013, and, I'll be honest, we focused primarily on New York because I think New York historically has been a much more friendly environment for female founders and funding around it. So in 2013, there was one Series A round led by a female founder, and that was Shanlin Ma of Zola, $5 million round. To give you context, 2020, like you said, was not a great year in many respects, but in New York, there were 36 Series A rounds led by female founders. So, yes, we can, to Susan's point, look at the high level numbers and say there's no progress happening. But I think that it's really important to recognize that, this is where it matters. You need to see that kind of early momentum, that early funding, in order to truly make change. And 100% agree, we have a long way to go. But, I think that these numbers are moving in the right direction. And I think specific to 2020, when we put our report a couple of weeks ago, we also talked about women in healthcare and the fact that, 10% of Series A rounds in digital health were actually led by women. And, that's pretty significant. And we've definitely seen, within our own portfolio, as well as generally in the market, a lot more women that are building products and solutions, focused on digital health, which I think, it's a tremendous opportunity.
I love this this arc of focusing on the positive, but I would be remiss also in 2020 if we didn't talk about kind of the racial justice reckoning and where Black entrepreneurial women in particular and Latinx entrepreneurial women are radically underestimated. Digital Undivided does a great study, Project Diane, and they show that the percentages climbed, but it climbed to 0.27%. Which is closer to 0 than 1. So we can't really celebrate that success there. But do you have any comments about, how the funding environment needs to change or specifics relative to underestimated founders? And we'll get into this as we continue to go forward, but any commentary specifically on that? And Anu, we'll start with you this time.
I think, last year was definitely, I would say, kind of a breakthrough year as it related to awareness around funding for underrepresented founders. And I think that's incredible. And that was not just for venture funds. I think, across the board, limited partners were also kind of paying attention to what was happening. To your earlier point about the percentages, when you look at the percentages for women already, to me, it's not surprising that, you're looking at kind of similar ratios as it relates to Black and Latinx women, unfortunately. I do think that the awareness has led to positive change. We see it, across the board in terms of deal flow. We see it even in our portfolio. Just those numbers are going up. I think, your question around change, I do believe, when you look at the venture ecosystem, it's really driven by limited partners. They're at the top of the stack. That's where the money comes from. And if they are not the ones that are truly pushing for change and making it a priority, I think it's going to be very tough to see that come to light. And I think that, it can be done in ways that are related to the venture, kind of the managers themselves. It can be related to the ratios amongst, the portfolio companies that you invest in. I think it just requires attention. And I think it was the CIO of Yale, if I remember correctly, made a really strong point in the fall of last year around, his emphasis on the importance of this issue. So we need more leadership from an LP perspective. I'll also say that, there are, the more women that you see who, Whitney Wolfe Herd leading the Bumble IPO, Anne Wojcicki, 23andMe, you need to see examples. And those examples need to be, spoken about and recognized as, inspiration for other women. So I think that the awareness around the stories of these women, how they built these companies, and then, quite frankly, the wealth generation from their employees, then going on to hopefully go, start their own companies, and really that flywheel effect happening, I think is really important. And then I think, it's interesting, going back to the Series A point, I think we're seeing strong momentum at the Series A. I think where it tends to get harder is late stage and growth. And if you look at kind of the typical, kind of late stage fund or private equity fund, you don't really see a lot of women or diversity at all. And so, I don't think that impact of, pushing more diversity at those, kind of later stage growth funds has happened yet. And I think that that's important. You need to have diversity of thought in order for people to see, out of their box.
And I've seen you nodding your head, so wanted to give you a little airtime here on this topic too.
So I would agree with Anu that this really does have to start with LPs. I will say that this year was a watershed year. It was a watershed year for corporations, and that includes LPs. And we're starting to see some of that impact. We were out raising a fund quite recently, and towards, I would say, midway through that, certainly after George Floyd and after the summer, there was so much more awareness and desire to get to know GPs of color that I think did not exist before George Floyd. I honestly, what George Floyd's daughter said about "my daddy changed the world," I think is so true, because there just is a very different awareness, and people are starting to do things about it. So I was going to say, one of the companies that we met with who became an LP in our new fund was Bank of America, and they set up a fund, a $2 billion fund, very quickly to invest in GPs of color and women. And that did not exist 18 months ago. And we saw at least a half dozen corporate efforts like that were pumping money into the ecosystem, where it's clearly going to take longer for some of the LPs who are traditional funders to catch up to that. But I think just the very fact that they're seeing companies take a big initiative is going to have an impact. And I think the other thing I would say is that this has to be a priority for every fund. We were impacted by George Floyd. I think it forced us to think much more thoughtfully about the way that we meet founders, the commitment we needed to make sure that our deal flow was very diverse, and that included everything from getting to know diverse GPs to making sure that we were getting to know founders in other parts of the country, many cities where there are many, many more founders of color, and making a commitment to meet with every single founder of color who reached out to us. So that is definite. We get a ton of over the transom deal flow, but that's a commitment that we made last summer, and we've kept it. So it's actually helped us in many, many ways. When we look at our current investments in our third fund, 35% of them have a founder of color, and about 65% of them have a non-white founder. So it's definitely something that I think we can all impact if we are more conscious of it and more thoughtful about where we look.
Thank you, both of you. I think it's great points that the data can be discouraging. So you have to look at the encouraging, and 2020 had a lot of challenges, but it did open us up geographically. It opened us up in terms of our responsibility and accountability, as you've been articulating, for underestimated founders, generically. So what I like to talk about is on the heels of 2020, inclusivity started to become like the normal part of our language. It is now, it's not going away. It changed for the good permanently. And we're seeing a new economics in play in 2021 and beyond. Stakeholders care about this, whether that's the consumer, the investor, the founder themselves. And so I'd love to unpack a little bit about what you're seeing, or what are the new economics behind why it's smart to invest in women and people of color. And I'd love to say, like, well, ultimately, I think our shared destination is not to have these qualifiers out there. We like to say we'll get to a world where we're successful, where women and underestimated founders are celebrated as just great CEOs, great founders without qualifiers. So with that tee up, Susan, you want to go again first and talk about some of the new economics behind investing in women and underestimated?
Yep. I will start by saying that that our thesis begins with a belief that that the founders with a competitive advantage are founders who intuitively understand the consumer they're building for. We look for companies that are building scalable solutions to problems that millions of people face, where the founder understands that problem firsthand. And that was what was behind our desire, to start this fund was just meeting so many female founders here in New York in 2012, 2013, 2014, actually even before that when I was at Gilt, who all had the same stories about raising money. But these were women who were consumer problem solvers. They saw some aspect of life that they and all of their peers were facing, and they believed they could make it better. And everything I've done throughout my career has been focused on the female consumer. We are the dominant consumer. The numbers are very clear, and it's not just in the obvious areas like beauty and fashion, but it's everything from what healthcare plan you use, what house you buy, what insurance plan, just on and on. Women make the final decision on 85% of all consumer spending. So it's a competitive advantage to have a founder who intuitively understands that person and knows what she needs, knows how to talk to her, knows where to find her, all of those things. And I think that's true as you dig deeper into specific segments of that consumer population. The consumer is changing dramatically, year by year, as well as obviously decade by decade. But as we look at a country that is becoming increasingly diverse, we have to be looking for founders who, again, intuitively understand the segments that need really transformational companies. And I would just add that I think COVID really shone a light on so many areas that are broken, whether that be the education system or healthcare, that I know anecdotally women are focused on and women of color are focused on. So I think we're going to see a lot of great companies built during the next decade. I think that, for all of the challenges of the past year, I think there's a lot of hope coming out of this too, because we do see where the problems are. And I genuinely believe that 2020, yes, it's going to be remembered as the year of the pandemic, but it's also going to be remembered as the year of a decade of change, and that's a really good thing.
I love that decade of change is coming. The future is bright. Anu, how about you? I mean, you've been at this a long time too, so the economics are kind of old news to you, but new to a lot of people. So
I would say, I mean, completely agree with Susan. I was actually going to say, I don't think it's new economics, to be honest. I think that, some of our best investments looking back, and actually maybe I should start by saying, when you think about venture, it's all about finding outsized returns and being able to identify opportunities early that, some of your peer group may miss. And so, looking at our Fund 1 or our Fund 2 portfolio, some of our best performing companies were ones where, they went out, talked to a bunch of, male VCs and they didn't get it, whether it was astrology, mental health, beauty, so many examples, women's health. I think that is an inherent advantage, when you're competing against, hundreds of funds and you have an insight and you recognize, consumer behavior that's shifting. I think that sets you up to just have a different lens and to be able to identify different opportunities. And so, to Susan's point, I think, the cultural demographics of the country are changing. I think what young consumers are looking for in their products and services is evolving and changing. And so as a result of that, I'm really excited. I think that, you're going to see a lot of innovation and whether it's in healthcare, education, work from home, collaboration tools. I mean, there's just so many areas I think where, we're going to see a ton of creativity and change.
Thank you. Well, the conversation is it's never been brighter, in my perspective, to be a female founder, out creating a company and out raising capital. And yet the bar for female founders is high. That's the name of the session that we're in. So we have about 8 more minutes before we're going to move over to Q&A from the audience. And I just wanted to give you each about 4 minutes to say, what is the advice that you can give to women about how they can optimize their chances or the best ways to rise above the noise. And this doesn't have to be just how to perfect your pitch. This can be holistic advice about how to navigate the process. So Anu, let's start with you.
So I think, from a more holistic perspective, I would start with the fact that I think the entrepreneurial journey is really lonely. And, if you're about to start or embark on it for the first time, I think reaching out and developing a network of other founders, is incredibly important as a support system. And, it could be founders at the same stage. It could be slightly later stage within your industry, outside of your industry. I think, using social platforms as a way to connect with others is incredibly important. And, I think we see that in our own portfolio, outside of our portfolio. So that kind of social community and network is number one. I would say number two, when you think about your pitch deck, and I think, this is more practical advice. I think it's really important to think about why you. One of the biggest questions that investors have at the seed stage, particularly for companies that are pre-launch, is, what is it that you have that will enable you to be uniquely successful with this business? And so really being able to articulate that in a way that is compelling, I think is incredibly important. And then I would say, this is kind of a more basic one, which I'm sure many people have heard, but you have to know your numbers. You have to know what are the drivers, the financial drivers of your business. How does that change over time? And just really kind of having an intuitive understanding of the numbers behind every aspect of your business is something that, I think sometimes you just kind of take for granted. And so, I would really push on, making sure that that's a really strong part of, how you articulate your pitch is really important.
Thank you. Susan, you got some tips you'd like to share? On mute again, Susan.
My great introduction by doing this. my meeting right before this one was with a woman who I've known since she was the chief of staff to somebody, and she's been working on an idea on a company, and she had set up a call with me, not because she's raising now, but because she wants to that she will be raising. And I think that's the single best advice I can give to people is don't wait until you need to raise capital to start meeting VCs. And there are lots of different ways to do that. There are events, there are certainly pitch competitions, there are lots of ways that you can find an introduction to some of the people who you would like to be pitching, whether it's 3 months from now or 6 months from now, and start to really get to know them, and get me excited about what you're building so that I start tracking your company. And honestly, I think that it will save lots of heartache, but it's also the fastest and best way to raise that first round. I will also say that I think beginning to build your VC CRM well before you're going out to raise is also a good thing. Get to know which VCs invest in whatever the sector is that you're focused on. Get to know which partners do what kind of investing. See what's in their portfolio. Make sure there isn't a competitive company in there that might knock them out. But you want to have a really good CRM, a really good spreadsheet of targets that are maybe your top targets, your mid-range targets, and your, maybe the third level. But I would spend time really trying to do that research early. The second thing I would say is that you need to not be afraid to explain why this is $1 billion idea. So we still see way too many female founders who present what they're building. They are very comfortable telling you why what they're building is going to be great and it's going to work. And that gets you probably to, $25-30 million of sales over your first, let's say, 3 years. But at the end of the day, for someone who is running a VC fund where many, many, many of our investments don't pan out, we have to believe that every investment has the potential to be a real winner. So I promise you, every single guy who's out there pitching is telling those VCs exactly why this is $1 billion idea. And so, even though it may not be comfortable for you, and even though you don't have a plan for it, being able to set out a vision that shows how this can become, I think is really important. And the third thing I would say is start thinking about your Series A the minute you raise your seed round, because the Series A is where female founders, I think, often run into the biggest problem. There are lots of seed rounds every year, but getting that institutional Series A done is really a significant bar. So thinking about it early, and right after you raise that seed round, if it's going to give you 18 months, then think 15 months, because you're going to need 3 months to go out and actually raise your seed, and set goals for yourself for each quarter of what you need to accomplish in order to get to that Series A metric. There are multiple places where you can at least get a sense of what the Series A metrics are. We keep very good updated files on what the top dozen or so Series A funds are expecting to see. And so that, I think, has to become part of your thinking as you really dig in to build your product.
Thank you. And I just wanted to double down and say that if any of that advice felt a bit daunting, we welcome you to join Always and come check us out. Susan and Anu are both passionate contributors and members of our community. And we help with all of those aspects, the support of not feeling alone, the inside track of guidance and how to build a great company as well as to do a good pitch, and also accessibility and brokering some of those intros before you need to fundraise, Susan. I think that's so important because it's a two-way street. The founder needs to be evaluating the investors as well. Who gets me? Who do I want to do business with? Because this is somebody you're going to be partnering with for a long time. So I think it's really a great advice to start that process early, and welcome everybody to come to and join and plug into the Always community as a founder, attend some of our boot camps, attend some of our programming and events, and get some access to some investors as well. So with that, Grace has rejoined us, and I think we're going to turn over to asking questions from the audience. So Grace, take it away.
Well, on that note, I wanted to see if each of you had either an accelerator or a firm or a fund that focused specifically on women or people of color that you want to give a shout out to right now, so the people in the audience have at least a place to start to check out. And so Pam, great. Always is a great start. Susan, what about you?
Explain to me what you're looking for. Obviously, BBG Ventures and Female Founders Fund are great places to start because we both focus on female founders and we both do seed. So good place to start. But there are many funds in the city. I would say January Ventures is one I'll throw. A relatively new fund. I would say Metrodora is another one that recently raised and recently launched, and they are focused also on seed. Serena Ventures, another very new fund that just did their first close. So there's lots of them. In fact, maybe one of the things we can do is to put together a list for you that could be shared with people.
Amazing. Anu, any additional ones that you want to get in there?
No, I mean, I think the only other one I would mention is Backstage Capital and Harlem Capital. Those are a couple I would add to that list.
Amazing. So Diana said, in regards to funding of female founders, is it prejudice or is it that women tend to have different styles or skills that they need to build upon? Anu, do you want to kick that off? How do you see this whole situation going on and some advice?
Yeah, so I mean, I think there's a couple ways to answer that question. At the seed, maybe I'll take the Series A perspective on this. I think it's important to think about the person that you're pitching and what position that they're in, right? So if you take the average Series A investor, they will make, call it 1 to 2 new investments a year, right? And what they're doing is effectively signing up for, a 10-year relationship. And at the Series A, if you have your pick of X number of companies and you know that you're going to be kind of engaged with this company for a significant amount of time, I think that, as a founder, it's really important for you to obviously talk about the subject matter itself. But I think more importantly it's also important, to Susan's earlier point, to talk about the potential of this business. How do you get to that $1 billion outcome? Because if you're trying to sell, for example, a fertility-based startup to I would say majority of male investors, the subject matter may not be something that they necessarily identify with. But if you can paint a picture around, doubling, tripling the business over, a set period of time, I think that changes the dynamic. And so, yes, you can call that prejudice, but it's also kind of the reality of the day-to-day for that investor. And so I think, we touched on this earlier. I think the more that you can show that the potential of your business is not just limited to Susan's earlier point, to, how we get to 25 million, but more in line with what, your male counterparts are pitching, I think the higher probability of success.
Great, thank you for that. This is an interesting one because this is something that I don't think gets talked about a lot, but is definitely another prejudice that people are facing. From Shabina is, can we speak to your thoughts on the likelihood of ageism from an investor's point of view, on top of being female, solo entrepreneur, and coming from a long technical career, but teaching yourself to code in new languages to catch up with millennials that are learning these things right out of school? Pam, do you have any guidance on this?
Ageism is real. In tech, it's as real as any other category of underestimation that happens. There's a lot of data that shows that there's just as much innovation and success capability in more mature audiences than there are in younger. And so again, I think it comes to getting to know some of the investors early on. Meet them early, because it's a relationship-driven business. As Anu said, there's just so many inbounds coming. How do you differentiate yourself? Yes, and the quality and caliber of your business and how you pitch it, but developing a relationship with individuals and to combat kind of that natural, maybe whatever bias is brought to the table. It doesn't matter whether it's ageism or gender or sexual orientation or race. It's all the same thing. And so my encouragement is to double down on what Susan said, which is, if get to know them. And if you don't know how to get to know them, please come to someone like Always. Use us as a connector facility to get you introduced. That's what we're here to do. You're going to be a great entrepreneur. You're a great founder. We're just here to be some rocket fuel and take away some of the obstacles that naturally exist in the industry. So come talk to us. We'd love to support you.
And Grace, can I add one thing to this? I fully subscribe to every single person here should be joining Always. But I would also say that there is a huge underserved market out there. We looked recently into the boomer market and did a survey that we will be writing about relatively soon. But when you think about the fact that there are 56 million people who are over 55 right now, so boomers, the youngest boomers are 55, and 10,000 more who are turning 65 every day, it's a giant audience. And boomers are unlike the seniors who came before them because they are pretty tech savvy. But a lot of the tech applications that are out there, while they may be valuable to a boomer, are not necessarily user-friendly for them. So I think there's a huge opportunity, and this goes back to something I said earlier, which is that founders who intuitively understand the people they're building for are going to have a competitive advantage. So if you are a 50-year-old, 55-year-old female founder, think about your peers, think about how you could really build for that very underserved and hugely valuable consumer.
Anu, anything you want to add in, or
No, I think you did. Pam and Susan covered it.
Perfect. I want to wrap it up with this question for each of you. And the question is, how do you think that women invest differently than perhaps their male counterpart? Pam, do you want to kick that off? What do you think the differences are?
Well, we're all animals that are driven by kind of a brain, and homophily is real. I'm just going to say it like it's, in homophily is just like likes like. And so I think it gets back to, which is what Anu and Susan were talking about, which is a better understanding. When you come from an experience set, you can often have a better appreciation for that experience set. It's just one less bar to have to educate yourself on. And I think women also are a little bit more open because it has been harder. They're appreciative of the challenges that exist for underestimated in any way, shape, or form. And so I think there's just an openness to look at ideas and be receptive to ideas. But generally speaking, we also say, like, this is not going to be solved by just women investing in women, though I deeply appreciate, Anu and Susan's leadership in this area. Men also have to start investing in these ideas because they're big ideas. And they're worthy of generating the returns. It's a capital-driven business, right? And it's about generating returns. Women have amazing ideas that are going to be breakthrough successes and redefine whole categories. And so my only caution is, yes, women investors, but not exclusively women investors. Don't limit yourself.
I'd say, it's an interesting question. I'm not entirely sure that men and women invest differently. I think that it really depends the stage of company that you're looking at. So I think in private markets, you have a ton of women in the hedge fund industry who've done incredibly well. I think that, kind of going back to what Pam said, ultimately, I think what will drive alpha for women, who are kind of looking at female founders is that you have the ability to identify opportunities that may be overlooked. So it's not necessarily that, your peer group has a different lens. But I think that you intuitively understand, the way that culture is shifting. And so I think that, it depends at the seed stage, you're looking at different ideas and opportunities. I think, late stage and growth stage, from a public markets perspective, there's plenty of examples of women who've done incredibly well. So I think it's hard to generalize on that.
And what are your thoughts?
I second what both of them said.
Yeah.
I don't have anything to add to it.
All righty. Well, the three of you have great rapport and have shared some really wonderful pieces of advice and feedback. And I think a lot of the people in the chat are feeling very hopeful for the future. And it's so nice to be able to have a community of women like this to be able to learn from and support one another. So thank you all for being that source of support for so many people. We really appreciate you spending your time with us today.